the rent receivable account in William's ledger for the year ended is this. So William originally rented that apartment. He has a premises now. Part of the premises, he lent it out. He lent it out to a tenant. So the tenant is paying $450 per month. So now we have this information about William. This is a ledger for William. The first question says, name the ledger in which this account would appear. This is an account. So which ledger will it appear? What is the name of this ledger? What? Nominal ledger. So the first one is nominal ledger. So for 2, they said, explain each entry in the account. These are the entries: the first, the second, and the third. Are you with me? These are the 3 entries: the first, the second, and the third. So this entry here is saying balance broke down 900. So we have $450. That's what we pay per month for 1 month. What is this amount? Now when you talk about balance brought down, it means it has been carried down from a previous accounting or financial year. Do you get it? So if it has been carried down from a previous accounting year, it means there's an income rent prepaid for 2 months, which is equivalent to the 900. Do you get that, please? Rent prepaid for 2 months, which is equivalent to this. The third one, this is the income statement. So if this is the income statement, that is the revenue. And how much is it? 5,400, right? You say 5,400 divided by 450. What does that give you? 12. So this for 3. The income statement. Revenue received or rent receivable for 12 months. Are you getting what I'm doing here? Yes. They are saying we should explain each of these entries. The first entry has been explained, which is what? 2 months prepaid, which was carried down in the previous accounting year, now here. The income statement, this balance here is telling us that the tenant has paid 12 months, which has amounted to 5,400 for rent. So you could call it revenue received by Williams or rent receivable. Are you getting it, please? Yeah. Great. And the last one here. What is it? Okay. And the last one, we have the balance brought down 1,350. So 1,350 divided by 450 is how much? I think 3 months, right? Is it 3 months? 1,350 divided by 450. Yes. 3. Yes. Right? Yes. Thank you. So this is prepayment. Do you get it? It's prepayment for the next year, 22. Do you get it, please? Yes. This is the one before now. So this is the new prepayment going forward to 22. Do we get it? Yes. So you write prepaid rent for how many months? 3 months. Is it clear? Yes. The first one is rent prepaid for 2 months. The second one is rent paid for 12 months, which will be registered in that financial year. Stop right in place. This will be registered in this financial year, 21, because it goes for this accounting year. And the last one is prepaid rent for the next 22, for 3 months. Is it clear? Do you have any question about it? No. Okay. Then the last question here, he said, state where the balance on the account on 31 December 21 would appear in the statement of financial position. In your statement of financial position, you're going to have liability. Current liabilities. Yeah. Current liabilities. And what will be the title? The title for the current liability for this. You know the current liability is that it's for William, but it's a rent that has been paid for that tenant who has not used it. So it becomes a liability, right? Okay, so trade. No. Current liabilities, yes. Trade receivable is a current asset. What? Other receivables? Yeah, it's supposed to be other receivables, but no, it's not other receivables. Other receivables is an asset. This is a current liability.
Income, sir.
Income what?
Other payables.
What?
Other payables.
Other payables. No. What? Income prepaid. Because he received the income, right? But what income did he receive? The income that has not been used. He received the income, yes. But this account, this money, for the next 3 months, is still not used. So Williams has received that money, which is an income. But for what? For a prepaid rent. Is it clear? So write what? Income prepaid. Do we get it?
Yes, sir.
I'm going to quickly do the recap. Let's stop writing this. We have the rent receivable account for William. Stop writing, I said. We have the rent receivable account for William. What happens afterwards? Balance brought down for 2 months. That means for the first 2 years, he had this. Afterwards, we have the income statement, which is 5,004, which is for the next 12 months. I think that's clear. And the last one is what? The balance brought down, which is we pay for the next 3 months. Is it clear?
Yes.
You can write this. But the first transactions. So the balance brought down is 80. Then he said purchase stationery. We purchased it. So that was February 1. Is it February 1?
Yeah.
February 1. Cash.
Cash.
For how much?
64.
64, yeah. Then August 31.
August 31.
Petty cash.
Petty cash.
For 18.
80.
Now please add it together for me.
80 plus 64
Plus 18.
160.
Thank you. 162. $162. And the value of the value of the inventory stationary left is 75. So 162 minus 75 is what, please?
87.
87. Thank you. So for January 1, so our income statements now. For January 1. So our income statement will be 162 minus 75 is what? 87. 87. Then our balance carried down is what? 75. Thank you. 87 plus 75.
162.
Thank you. So we have here $162. Is it clear?
Yeah.
So 22. The year ended in what? December. Is it December?
Yeah.
December. So this will be December, not January.
December
31, yeah. So our income statement is December 31. Do you get that?
Yes.
So here in 22, January 1, our balance brought down will be 75. Is it clear?
Yes.
So please write. Do you have any question about it?
No.
Clear, right?
Yes.
Please right there, go to question 5. We started other payables and other receivables. All these things are additional information that we have to understand how we put them into the income statement, because the income statement is not just going to be like the way it used to be. Things will happen. Some people will not pay you as at when due. You will pay more than what you are supposed to pay for rent. These things are bound to happen. So whatever happens must still be interpreted in your income statement account, because you have paid or you have received. If you have received from some people, then you have to be accountable for it. If you have paid to some people, they have to be accountable for it. So whatever we do, we need to record them. That's why we did other payables and other receivables. There's rent. There's prepaid rent. Prepaid rent means that you have paid rent and you still have some outstanding that you have not used. So to the owner of that property, he has received the income from you, who is the tenant, but you have not used it. You've not used that month. It's just like me paying. Maybe my rent is 1,500, and I paid in 3 months. That means I paid. This is March, right? No, I paid March already. Let's say I paid April, May, June. That's 3 months. So I paid for 3 months upfront. That's a prepaid income for the owner of my property. He has received the money, but I have not used the month. So on his own financial statement, it will be recorded as a liability. But if I have used April will be an income for the owner of the building. Do you see? If I have used April will be an income which will be recorded in the income statement. Then if I have used April, it means in the statement of financial position, we're going to have May and June as prepaid rent. Do we get it? Do we understand these things? So all these things have to be accountable for. We need to account for them. That's why we call them additional information. So look at here. We have this information already. Then they said the following information is also available. So that means these are all called additional information. What do I call it? Additional information. Thank you. So these ones now is part of, whenever we start opening this income statement, we check them one by one. It has to reflect in the income statement. Is it clear? So we have our income statement for the year. The title, I told you earlier, when you are preparing your income statement, you need to write the title. You did not write title. Yeah, you note it.
This one.
Yeah, you need to write the title. Without writing the title, you are losing the mark. So we have income statement. Income statement for the year ended. For the year ended. This is 30 September 24, okay? 30 September 24. So this business, is it a trade business or service business?
Trade business.
Is it a trade business or service business?
Trade business.
Service, consultancy. Is a consultant. She's a consultant, she's not selling. So it's a service. So there's nothing like maybe goods or purchases, no. So the first thing we need to write, they said, please receive from clients. This is her own revenue or sales. Is it clear? So the first thing, fees received from client. Fees received from clients amounts to 40,900. 40,900. Now, here they said it is estimated that half of the motor vehicle expenses relate to Miriam's personal use. Half of the office expenses relates to Miriam's personal use. So, half of the motor expenses, what is the motor expenses? 7,250, right?
Yes.
That's the office.
Oh, office, okay, motor vehicle, right?
1,812.
Okay, thank you. 1,840 divided by 2.
920.
920. So, this is part of what she has received, but it is an expenses. But this expenses is personal. So it has to be taken away from the revenue she made. Are you getting it? So, less personal use. How much is it? 920. Take it away, please. What does it give you?
39,080.
39,080. Are we sure, please? Are we sure? Very good.
39,000.
Please, let's check. We have calculators. Don't dry post for me. Just check.
Mister, it's yeah.
39,080.
No, Mr. 980. It's 980.
39,980.
980.
Yes.
39,980.
Yes.
Let's just be sure, okay? So, let me write it again. Remember, when you have purchases, when you withdraw for personal use, you take it away from your purchases. Yes or no? So here, whatever you have made in terms of revenue, because it is personal, you have to take it away from your revenue. Is it clear, please?
Yes.
Great. Now we move on. We have expenses now, right? Less expenses now. Less expenses. So what are the expenses we have? We have office expenses, right? Office expenses. So for office expenses, let's check.
Let's explain. Oh, okay.
So we start with office expenses, right? Yeah. So for office expenses, we have 7,250. Do we have any information for office expenses?
Yes.
They said the office expenses include stationery on 30 September. The inventory of stationery was valued at 250. So this was left, which is to the next year. So 250 minus your office expenses. Do we get it here? They said the value of the stationery is 250. That means it's going for the next one. So to be what?
Let us have another one.
7. Do you have another one?
They said office expenses 45.
Where is it?
They said office expenses are due amounted to $45.
45. Okay, yes, and we have this. So we have 7,250 minus 250 plus 45. Do we get it now? Office expenses due $45. You add it to your expenses. Are you getting me? So it will be, for office expenses, we're going to have 7,250 minus the value of the stationery, which is what? 250 plus the one due 45. Add it all together, please. 7,045. 7,045. 7,045. Are we getting it? Are you getting it, guys?
Yes, yes.
Great. Now we move on. We're done with office expenses. We go to wages. We have 27,500 for wages. Do you have any information for wages? Yes. Wages paid in cash, $115, have not been entered in the accounting records. So what do? You add this plus this. Has not been entered. They forget to enter it. So what do? You add this plus this. Is it clear? So for wages, we have, how much is the wages for?
27,500.
27,500
500.
plus 115. What does that give you?
27,000.
615.
Yes.
27,000.
615.
Are you with me?
Yes.
Great. We move on. Then we have insurance. Are you with me?
Oh, that's 100.
Insurance is 1,800. there any information about insurance? Yeah, they said the insurance covers a period of 15 months to 31 December 24. Insurance is going to be for a year. So we have, how much is insurance? 1,800 divided by 15. What does that give you, please? 120. 120 times 12 is what? 1,440. Are you sure? Wow.
Yes,
Great. Great. So, our insurance is good 1,440. I think you understand now.
Yes.
Because the whole insurance here is for 18 months. But we need for a whole year, which is 12 months. Is it clear?
Yes.
And now, are you here?
Yeah, just
So, our insurance.
insurance.
So, you have to put the analysis. First, 1,800 divided by 12, right? No, divided by 18. Divided by 18. What? By 15. What does that give you? 920. 120. So 120 multiplied by 12. What does that give you? 440. 1,440. Are we getting it now? Alright. The next one. We're done with insurance. We go to rates. Rate is 800, right?
Yeah.
800. If you do ya again, I will kick you out. That ya again, you do it, I will kick you out.
I say what question?
You do ya again, I'm going to kick you out. I'm not going to say nothing again. If you do ya again, I'm going to kick you out. That's all.
Let me see.
I don't, if you do ya again, I'm going to kick you out.
Okay.
So we go on to rates. What is the rate? 800. Do you have any information about rates? Yeah, they said rate the amount to 160. So we have 800 plus 160, 06, 960. Do you understand rate here?
Yes.
So we have rates 960. You write it here, please. 800 plus 160. What else do we have? The rate is done. Motor vehicle expenses 1,840. It is half now because we took 920 to the other side. So motor vehicle expenses, motor vehicle expenses 920. What else do we have? Commission receivable. We have commission receivable.
No, fees received from clients.
What?
You missed looking for the fees received for clients, right?
No, we did this already.
Ah, okay.
We did it. So we have commission receivable. It's supposed to be added up here. Because these are our expenses. You add the commission here. So how much is the commission? Is that you can still write it. Commission receivable. Commission receivable. How much is it?
600.
We have 5,600 and the additional information is outstanding 250. So 250 plus 5,600. So you write 250 plus 5,600. What does that give you? 5,850. 5,850. Now, what does this give you? And what does this give you? I think that's all about the information, right?
Yes.
Is that all?
Yes.
Okay. Please add them together.
5,000.
This?
Yes.
55?
45,830.
45,830. Okay. And what does it give you?
What?
Mister,
Yes?
it's 330.
35.
37.
Here, right?
Yes. No, which one is it?
Yeah,
379.
37.
9.
Right,
Nine.
40.
40.
Right.
Can you just count? Take count. What's making you to? Hey, you don't speak Arabic in my class, okay? What does it give you? 3798. He said 37980, he said 37940. Please check again. What does this give you?
27,615, right?
Yes, please. 37980.
Mr. 80, I was wrong.
Okay, 37980.
By the way.
So now take it away, please. What does it give you? 37980 minus 45,830. 7,000.
Mr. 78550.
7,880.
Yes, 7850.
So these are
That's
debts,
750.
profit, or profit for the year. Profit.
So we can write both of them, Mr.
Yes, either. Is it clear now? It's right.
Good, Mr.
Let me see.
Yeah. This is what I have to do. I got the problem.
The additional information, 1,000 insurance, wages,
Mr.
wages,
Question 6.
office expenses. So now, those information are missing.